Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday, as we are about to do what we do each and every day, taking a look at the same 10 to 12 futures markets from both an educational and breakout trading perspective. Real quick announcement. I've had a couple of requests for this, and we're going to put it into play. We're going to have a free preview week next week at TradersArmy.com. So the free preview week, anybody who's signed up as a free member, you will get the link so that you can join us for some of our live trading rooms. So we have a Sunday night. Our first one, the free preview week, will kick off with this week's Sunday night live trade room. So I'd love to have you join us. So go to TradersArmy.com, sign up for the free membership today. You can see what it's like to see what a premium membership is and get a chance to see if it makes sense. So, all right, let's go ahead and dive right in. So the S&P this morning, we are up about 9.5 points. And if you look at this, yesterday I was looking at this primarily from a gap fill perspective area. And the gap fill area yesterday in the Nasdaq, the S&P, completely went through the level. We had a lot of basing here in front of the level, which certainly further weakened that zone. But if we kind of zoom in, you can see we came into it and immediately blew right through it. Now, depending on where your stop would be, typically we want to keep our stop above the pivot. You may or may not have been stopped out because your stop's going to be above probably this candle here. My stop is always going to be typically outside of that leg in candlestick. And I'm not a fan of just one or two ticks outside of this zone, which definitely makes it a much wider play. And it didn't really get much of a move out of that level. And so now, as we are heading into this evening, or this morning, we are up a little bit in the pre-market, up about 10 points in the pre-market. Not a tremendous amount, but are up a little bit there. So I do want to look at this. We've got our 15-minute level here, which worked out really, really well last week. I'm going to remove that one. I thought I had taken it off already, frankly. And so now I'm going to look into the origin of this move down. Now, this was the Mexican trade tariff announcements. And so I wouldn't normally surround an area at this time of the day. The time of the day for this is not a good time of day. But this was the exact time that the Mexican tariffs were announced. And so those tariffs caused a pretty strong movement in the market, which is fine because now it just sets up a place for a potential reversal in the future. So, I hear a lot of people that don't like the tweets and the tariffs and all these different things. And from a non-political perspective, volatility is what I'm looking for. And this helps me when I get volatility. So that would be the area for a potential reversal. That's pretty far away from where we are today. I don't know that we're going to make it up there today. And so when I look at today on a 15-minute chart, there's really nothing I'm in love with on the S&P. I'll tell you what I'm not in love with, and that's going long. I don't really see a strong reason for me to get long. My 4 hour is giving me a really nice opportunity to re-engage on a short. We could theoretically get a reversal off of this area here, off the 4 hour. And so if you wanted to go candle to candle short somewhere up here, I think that'd be okay as well. But, the price pattern that I like to see is that, call it a bear rally, right? Bear rally, bear rally, bear rally. And those bear rally shorts will continue until we change trend direction, right? Something has to cause us to have a change in trend direction. Now, that's the S&P. Let's look at the Nasdaq. The Nasdaq yesterday worked out brilliantly. So the Nasdaq significantly underperformed the S&P. We got our touch into the gap fill level and then a huge move away, hit both target 1 and target 2. So if you are a Traders Army subscriber, the private trade feed was updated to illustrate our targets. And that trade worked out really, really well. So we're going to remove these targets now. And this gap fill level is still going to be a viable trade level. So I'm going to leave the level on, convert it to a dashed line because that could be a reversal point. And now I'm looking for our next viable entry opportunity. So when I look at our next viable entry opportunity, here on the 15-minute chart, there's this little tiny wick over wick area here that might pass a lot of people by. But I am, interested in this little wick over wick level. Don't like the fact that we're basing in front of it, which kind of scares me away from it a bit. So I'm going to wrap my lines around the one above it, but I wouldn't be completely opposed to somebody taking that short on that wick over wick level. I could see the argument for it. Let's put it that way. So that would be our 15-minute level for a potential reversal point if indeed we make it back up to that region. We could just roll over from kind of where we are. What I'm not looking to do, like I said earlier, is go long. Not looking for a long. I want to stay primarily to the short side in these markets today. In the crude oil, so crude oil's level yesterday, if I go to our 15-minute chart, we had talked about the retest of this triangle kind of breakout area, right? And so price came up and gave us just a very quick touch and go. You may or may not have gotten filled on that level, depending on where you exactly placed your proximal line in here. And so if you didn't get filled on it, the level is still very valid. Well, whether you got filled or not, the level is still valid, but by coming so close to it, we've got to convert it to a confirmation short now, if price does indeed make it back up to there. We have pretty much broken down from this little level, and so now what I'm going to do is also wrap my lines around here, which would be the origin of this little speed candle. Those two speed candles together, and speed candles do tend to get retraced overall. So I'd look for this 53.18 by 53.34 level for a potential retracement on this one. Once again, the crude oil is another one. I'm really just not looking for a long. I don't really have a quality long until about 50. All right, gold. So in gold, we had a confirmation short, and it confirmed that it didn't work. And so I need to pull this thing off. And when I look at gold from a 4-hour perspective, we are way parabolic in our overextension, but it doesn't mean that we're going to reverse. And so if I look at this 4-hour level, I don't really have a decent 4-hour level until up here. That's my next decent 4-hour level. So when I go to that smaller time period, I'd be looking to buy a quality pullback. Well, I've got two levels of demand down here that it may be worth buying. You also could theoretically take a look at this area right through here for a potential pullback. I don't love the fact that we're kind of chopping in front of it, but if you don't think we're going to make it to this one, you do have this one here for a potential. I'm going to remove it because I don't like it. It doesn't seem to fit my risk tolerance, but it is one that is available to do if you want to try to take the long. Longs are going to make more sense in gold for today. Now let's move over to bonds. Aussie, Euro, and Canadian. So in the bonds, we had a short set up here off the daily chart. Now I will tell you, I said it doesn't fit my risk parameters because I didn't want to trade against this parabolic movement. And I said we may get a little pullback off of here, but it's not a high enough probability for me to be willing to short. Some of you may have shorted it. Now what we are seeing is as the hourly chart is definitely weakening momentum into this area. And so I think that you could have a pullback into some of our better demand zones. Now, as I look at these demand zones, I'm going to come to this one here as really the first one that gives me some quality strength. If you're so inclined and you really want to try to short it until you get down into here, you could theoretically be looking at, maybe potentially a breakdown out of here. But this would be our reversal point. In the Aussie, we had a little 15-minute level. Price rallied up into that 15-minute level in our overnight, and now we have moved off of it very, very hard. But we're bouncing back up on this big green candle here off the hourly chart. Now this moved about a 4-to-1 from our entry point here. So if you did get in on this thing, take your stop, lock in some profits, make something on there because you already got your 4-to-1 move. It came to its opposing fair price value area, which would be where our target's going to be on those things. Level's not dead. Level's not dead, but we've based in front of it for too long. So you know what? Let me rephrase that. Level is dead. I don't want to take this again. Primarily because we hit it, we came down, came back to it, came down. So that to me is basing in front of the level. So move your stop to break even. You don't necessarily have to take your money off the table, but our next level of supply isn't until somewhere up in this region here, and our. But we're forming a little bit of basing down here. We're performing a little bit of a bullish base in the Aussie, and so we've got a higher swing high now in our 4-hour chart. And I think that there's a reason to start to look at long opportunities on some of these currency markets that are giving me that strength. And so when I look at the Aussie, we've got a reversal off of here. There's nothing I want to add at the moment. Quite possibly this is a pretty strong area here, but that's about the only one that I would add, although time of day is not great. In the euro, we came, we had our confirmation entry, and that little confirmation entry here that we had set up, price came into it, gave us a little move away, and then popped up through it. Now, one of the things I talked about in the live trade room and yesterday is that I felt like we were building that base in the euro, right? Just like I just talked about in the Aussie, is that we were kind of, our momentum was slowing on the way down and starting to kind of come back up. This actually put in a double bottom pattern. If you look here, you see your double bottom pattern where the second bottom is a little bit lower than the first, and prices have now rallied up kind of through this area. So there's a little bit of strength in this one. We're still getting that same kind of picture that we did in the Aussie, but now if we do get a pullback on this, I would be looking for long opportunities. Now I think this one gives me potentially better price action for a long than the Aussie does. I'm going to have to look at this area here for the next opportunity for a long on some sort of a pullback. I was looking at here originally, and I like this price action, and the time of day is strong. I just feel like this is a little bit lower on the scale and a better opportunity to maybe get into that thing. All right, the Canadian dollar. So we had our confirmation short breakdown yesterday. Talked about if you had taken your money off the table, kind of move that thing down. On the next level, we rallied up to this area here, which could serve as a little breakout, and we popped above it in the overnight, and now we're just kind of hovering around it. So technically on this one, you're looking at, you still have a chance, I think, for a potential breakout above here. If you didn't get in on this one in the overnight session, I think you still got a shot at getting back up above here. Your stop on this got to be below the last prior pivot, and the last prior pivot would be somewhere around in here. So you may or may not have gotten stopped out on it, depending on how tight you place those stops. Oftentimes, you're going to want to give it a little bit of room in order to kind of have some of that wiggle space to not get knocked out too quickly. So that one, I think you still could have some room to the upside on a move higher. Great British Pound, Japanese Yen. Last two are the pound is chopping along very sideways. Not a whole lot occurring here for us to really talk about. We are putting in higher swing lows, and higher swing highs, but they're fairly weak higher swing lows and higher swing highs. When I go to the 4-hour, kind of forming that same little bit of a basing here. I think we're seeing some strength in these currency markets overall, and so just keep an eye on some of those kind of continuing to rally. Japanese yen, we talked about this level here yesterday. Price came in and gave us one of those, hey, you want to trade it? Nope, and it moved away. So now I need to convert this to a confirmation entry because we'd come so close to it without getting filled. And looking at this on our kind of our 4-hour chart, we are definitely starting to really get a pretty nice rally out of this level. We're coming into some area here that we got a little bit of supply off this 4-hour level. That's our pullback, but I think we'll be able to thrust through there. So I don't have a quality level of demand to lean on just yet. And so I'm going to leave the one that we have in place right there. So those are our markets that we're looking at for today. If you've got any questions, please send me an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you have an amazing day, and I will talk to you soon. See you.